All right, wonderful.
Steve.
Thanks for having me, everyone. I appreciate you all taking time out of your Saturday as well. I know life is busy on Saturdays, and it's the rare one day as traders we get off, right? So use it wisely, and I think this is a wise use of your time. As Jeanette said, I'm Steve Dahl. I'm president of Taz Market Profile. Our headquarters is here in Chicago, but of course we have offices all over the globe, as many of you probably are aware. I think it probably is maybe a little overly flattering that they put the brightest light bulb above my head. As anybody that spent some time with me knows, I have a self-deprecating humor for good reason. It's a survival skill as a trader who's kind of been in the trenches for nearly 2 decades, trading and helping traders, and ultimately serving as an educator nowadays. So my presentation is called Market Profile in Minutes, and it's my goal to do just that. Today I'm going to show you my top trade setups, and we're going to go through a limited series of slides because, as Jeanette knows and Silas and all the great team over at TradeThirsty knows, I am all about just showing you proof of concept. So I'm going to teach you something about market profile today to hopefully kind of wet your whistle to want to learn more and take the next step. But we're hopefully going to wrap this thing up with some really good, tangible, I would say live charts if markets were moving, but they are recent charts right up to the close on Friday. And I hope this you enjoy it. First one is for the lawyers in attendance here and my NFA moles. We're glad that you're sitting in as well, as you have a Saturday as well. I'll let you take just a moment to read about the risks associated with trading. The gist of this in one sentence is there's a risk of loss associated with trading. Anything I say and do here is for educational purposes only, and nothing I say here is intended to be an individual recommendation for each and every one of you. Please trade responsibly. Okay, these are just a couple credibility items. How many of you are familiar with us? Quite a few familiar faces I see. Well, here's what you need to know about Taz Market Profile. We're in the education business. It just so happens we have some world-class tools. Pros use our product at the end of the day. What you need to know, we have bank traders, hedge funds, advisors, prop traders, and brokers on a daily basis use the product. Since 2011, we are proud participants on the Bloomberg terminal. So we have many thousands of institutional traders literally all over the globe that rely upon this. This is not a Shutterstock image. That's John Logan, my longtime partner, up there in front of the Bloomberg Hong Kong office some time ago, and you can see a very attentive audience there eager to learn about our method, many of which are active customers of ours today. But it's not just about the pros. I'm going to venture to guess most of you here are not professional traders like some of our presenters have experience, but you're independent traders. And so I want you to know through a few images here, that's me in various venues doing my thing, which is teaching traders in person, online, anywhere I can have an opportunity to get the message out about market profile and why it works and why it's superior to a lot of other methods that you're learning about out there. It's not just for the pros. It's also for, if you want to call yourself a Joe, fine. It's for the Joes too. In fact, here's an image just a couple short weeks ago. I was out in Silicon Valley. Those are real people, real eager traders out in the valley there outside San Francisco, eager to learn our product, and that's me up front there, enjoying the 50-degree warmer weather than we had at the time in Chicago. And I just think this is important before we continue on in this online venue, that you see that we're one of the few companies that's still not afraid to get out there and be in front of people. In just a few short weeks, I will be down in San Diego, and then I'm going to be flying coast to coast, as Jeanette knows, all the way out to New York City for the Traders Expo, again, making the visibility of our message reach more traders. Here's some familiar names that, again, are just really on the credibility front. And I want you to start thinking about some of these companies that are strong partners of ours. We do offer an awful lot of choices for you traders. You're probably on some of these platforms already. Bloomberg, Thinkorswim, eSignal, TradeStation, Sierra, Gade Capital, Ninja Trader, Trade Navigator, MetaTrader. I show this for one simple reason, not to plug our partners, but so that you know that we're a little bigger than the other guys. We have more integrations out there, a lot of choices for you. It's not going to be for a lack of choice that you go on to not use our product. I hope what you see today does just the opposite. There's a little preview of some products I'm going to show you here today in live. We're going to show you some Taz indicators in action, as well as our standalone software called the Taz Profile Scanner. All right, let's talk a little bit about Market profile. I think it's really important. We've had some great presenters here already, and Oliver and Rob, who have some fantastic experience, and they're teaching and doing a fine job of their method of trading and finding some discovery in the markets. So it's my job to teach you our way of approaching things. On the left, you'll see we have itemized in kind of this iceberg graph here some different market metrics that are commonly tracked and used as information, call it inputs, if you will, to trade. On the right, I have highlighted in Cliff Notes fashion what that information tells us as traders. So this is really important. Probably at the very top of that iceberg, and maybe they should update the slide, would actually be something that we put in the order flow category. You've probably heard about some of that earlier today or in some other venues. Remember, that's bid offer analysis. For nearly 2 decades, I am very well versed in bid offer analysis as well. Here's the problem with bid offer analysis, okay, often referred to as order flow. Many of those orders are run by algorithms that have the ability to program and flash orders that never will go on to be filled. And that scares me to death as a trader, that I might make a decision upon a big, huge order on a Goldman Sachs algorithm flashing a 3,000 lot 2 ticks above where the market is sitting now, only to see it disappear as the market approaches it. There's some funny business that can and does happen in the marketplace in order flow. I'll leave it at that. Next down is price action. I hear this an awful lot. When I talk to traders and I'm sitting at the airport all too often, I got my charts up and I'm sitting in the lounge and what have you, and somebody else next to me may be doing the same. We talk trading, and I say, how do you trade? That's great. I see you're looking at a chart right now, and then I'll hear price action. Price action, if you distill it down to what it really is, it's kind of like a Kodak moment, if you will, a snapshot. Listen to my clap. That right there, a meeting of minds between the buyer and a seller. But it's a fleeting moment. Okay, it's a fleeting moment. So it provides a moment-in-time snapshot of where a buyer and seller agree on price. Okay, and then you're going to react to that. So if I clap, and you can hear this here in my office, Kodak moments, whole bunch of them, and then you're going to react to that. Okay, you're going to react to that. One further layer down into the tip of the iceberg there is volume. Now, volume, remember, gives us a history of the liquidity over a period of time. That's really important because I'm going to bring up some charts here. I'd say 9 out of 10 of you, if I were to do a poll here, would say that they have volume in the bottom pane of their chart. When you fire up your charting platforms, most often it's by default at the bottom, right? Volume gives us a gauge of liquidity over a period of time. Now, it's important to realize that because when you get down furthest, deepest down into the iceberg, where the most amount of discovery is, you're dealing in market profile in that bottom area that's highlighted by the gray section. Now, what market profile does different over volume is it provides a factual landscape of how much relative volume has aggregated and at what specific prices. That doesn't mean much on this academic graph right now, but when we get into looking at some live tangible charts here in just a moment, you're going to see the power of knowing market profile and now relating it not just to time, but to price. Because one thing we all need to do as traders when we trade, regardless of whether you're trading order flow, you're trading volume, or if you ultimately go on to trade market profile, you have to tell the market at what price you want to get in. Don't you? Yes, you do. Let's talk a little bit about what a normal distribution curve looks like, because this is kind of what's under the hood in market profile. This is that standard distribution curve. The middle meaty part of that distribution curve that's highlighted in green, one standard deviation, as you can see, has the lion's share of the data points. In fact, about 70%. For you statistics geeks like me, 68.3% to be exact. It's important to be aware of that because this is going to end up being a very important part of what we discover as market profile traders. What you need to know in this abbreviated presentation is that as data points get further and further away from the mean, there's less and less data points in that, okay? And they become less and less significant to our decision making. If you're going to make a decision in any aspect of your life, do you want it to be based upon countless recurring patterns, or do you want it to be an anomaly or something that happened just randomly one time? I think we all can agree. We want to make decisions where we have data to support. This is a graph that I was sharing a chuckle in a recent presentation that I used to be able to, without a smirk, say this is what most markets generally look like. They go up, they go down from point A to point B and back again. and they move over time. It's a very simple graph, and my joke was that in the S&P, obviously, we have not seen a graph like this in some time, as we've been in a relentlessly bullish market to the benefit of the long-only or long-bias stock trader. I'm going to tell you I'm thrilled that each and every one of you are here, because I think we're going to have some more challenges ahead this year than I guess, were able to sidestep last year. So it's good that you're taking time now to learn how to prepare for more challenging markets than the long and hold strategy in stocks. This is generally how markets move. They move up, they move down, and then they will put in a directional bias and trend. So how do we take that information and turn it into profiling trading data? This is what looks like the bottom pane of your volume bars, right? The taller the histogram, as you can see depicted in the middle area there, the more volume or activity, and we said earlier, liquidity has occurred at that moment in time. Okay, so it's the most frequently recurring price where buyers and sellers say, we agree here. This is a fair price. So when we plot the price of the volume in this format, it reveals the relative frequency of volume at price, which is actually the very first step to determining probability of an outcome. Without that, we can't take the next step. On the perimeter, you'll see where the histogram bars are very short. Those are the least frequently occurring prices. It's the least volume occurring at those corresponding prices. What we do in market profile in its most simplistic form, and Pete Stoudemire did a great job. Countless books have been written, videos out there. You could spend literally 3 weeks learning this stuff, but it's my job to teach it to you as promised in just a few short minutes. We take this and we flip it sideways. That's the big profound difference. Well, what's so profound about that? It looks like the same graph flipped sideways. Well, we're looking for actionable information. And remember I said as traders, we have to tell the market at what price we enter. Well, how can we tell the market what price to enter if we don't have a relative gauge of volume relative to price? You can see on the left-hand side, this is obviously an academic example showing you a price scale. But when we turn it sideways, all of a sudden, now we can see, remember that meaty part of the bell-shaped curve we looked at moments ago where 70% of the activity is occurring? Well, guess what? We call that a value area or a fair auction. That's that area we really want to be aware of. So it's the most frequently recurring price. And it's a zone of prices, kind of like, I like to use the example, like an MSRP when you buy a car. There's a range of prices that if you buy or sell within that range, everyone feels pretty good about that. Therefore, we call it the fair auction or value area. So the red line, as you see here, that's going to depict what we call the unfair high. We also call it the high value area, and you'll soon see we also call it the upper end of the balance zone. In just the opposite manner, the bottom green line, we call the unfair low, the low value area, or the bottom of the balance area. In between that gray color line, that's the price where the market has recurred the most frequently, or in other words, the most volume has occurred at that. We call that the point of control. Okay, it's an area where the single greatest meeting of the minds has occurred, and that's a very important data point that you'll soon see. So let's go. Let's go through this graph. This is one of my favorite single images that help people not be so intimidated by market profile and say, you know what, this isn't as complicated as I thought. I don't need to read the 700-page book to fast track and learn this. So this is talking about the anatomy of market profile. In classic market profile terms, back when Pete Stoudemire did his fine work in the 80s, he took 30-minute price bars, okay, which actually worked out very nicely at the exchanges when they would change the letters. So we assigned letters to each 30-minute period. So the graph on the left, that's your typical price bar, okay? The one just to the right, TPO, that stands for time price opportunity prices. And we assign a letter to each of those zones. You can see B, C, D, E, F, G. And you'll see why we did that, so we could distinguish when then in our third image there, we collapse it to the left. Now, why is it important that we're collapsing it? What is the purpose of doing that? Well, that allows us to, again, aggregate data, which is generated over time, collapse it, and then we can aggregate it. So we get this very powerful and easy to see high volume zones that we need to be aware of. So now you can see, look at the completed profile on the right. You could see very clearly, if I were to ask any one of you, at what price in this example is there the greatest amount of activity. What is the single most popular price between buyers and sellers? You can see it's easily 1072. Why? Because you can see it's not important what the letters are. It's important how far it aggregates and points to the right. Do you see that? That's market profile. Taking liquidity measure of volume, assigning it a letter over time, collapsing it, and then taking note of where, essentially in no uncertain terms, the lines extend furthest to the right. But what you'll soon see is that it's not about the letters that's important. And this is a big distinguishing factor between classic market profile and there's a lot of market profile tools out there that still have this letter-based method. Look, it powers ours. We just realized that it's not the letter that's important. So we've moved to a color-based method here at TAS, and it's one of the number one single reasons that the institutional pros like our product. Because it's a fact that the human brain recognizes colors significantly faster than the alphabet. You can go online and find a bunch of studies, but many will argue over 100 to 1. You can make a decision faster, just like at a stoplight. Red, yellow, green. It doesn't say stop, yield, go. That's for good reason. So what we've done in our analytics is we've assigned a color, and I'm going to grab my drawing tool here. The red zone is that area that represents that 70% zone. So when you see the market inside that red zone, you know you're in the value area. What do you think markets do when they're inside the value area? This is a static example, but you'll soon see it live. They go sideways. The market's very comfortable. It's in that fair zone. Buyers and sellers readily agree on price, and just as you see here, markets go sideways. It's when the markets move outside of these areas. Look at the market break outside of that congestion zone. See the volume falls off steeply? Markets move fast and vertically through these zones. It's a very powerful thing to be aware of. It's widely accepted that these areas here are well known to be the areas where the institutional and commercial traders trade. How do we know? How can we tell you that we believe that to be the case too? Well, because many of them are our customers. Many of the big banks out in New York City and abroad, they are our customers. And here's what's interesting. We do consulting for some very large prop trading groups, hedge funds, CTAs, and so forth. And when they get to a certain critical mass, where when they enter and exit the market, they're having to place a certain size in the market, they actually look to place trades or enter in the market in these zones. So there's good liquidity in there. They look to enter in these value areas because they know they can get filled on these huge orders. But guess what? As an independent trader trading far smaller than an institutional bank, you can trade in these zones. And this is where, as you'll soon see, you can take advantage of knowing when the market is moving outside of those value areas and into breakout mode. Some good questions coming in. We'll handle those at the end. Thank you so much, everyone. Great questions, each and every one of you. So, to recap, this is really about determining two simple things, whether the market is in balance or out of balance. So in a single time frame context, you'll see there's an image on the left there. Markets are either balanced, as you see there, contained between the red and the green line, which we said is the balance area or value area, or they're out of balance. But they can't be in both. They're either in balance or they're out of balance. And balanced markets are an expression of time dimension. Remember, they're moving through a static range of prices, but they're just moving horizontally through time. Whereas an imbalanced market is an expression of price dimension. As traders, by and large, we're seeking out opportunities in any strategy we may deploy to find opportunities in price movement, not time movement. Sideways markets that remain perfectly in balance for an extended period of time, I guess perhaps if you're collecting premium as an options trader, that would certainly hold true. But for most of you that are picking a direction and trying to determine who to side with, the bulls or the bears, you need to be able to know what type of market you're in. So if you think about trading for a moment, is really about being successful by knowing and accurately being able to know when you're in balance or out of balance, because there's different strategies to deploy depending on what type of market you're in. Here's the beauty of it for you. We've created a tool called TAS Boxes, also known as Dynamic Profile. It's our flagship indicator. It's our most popular and widely used product. Thousands of traders all over the globe. Why? Because we're the only market profile provider that's willing to go out and just project through our proprietary algorithm explicit value area and levels. So instead of you having to kind of wander through some of these gray areas, those of you that are classic market profile enthusiasts, look, you're tripping over the alphabet method, we call it, and navigating these gray areas, we made it very black and white. And there's just a few simple rules to being successful with TAS Boxes. Again, also known as Dynamic Profile, because it is in real time, it's on the hard right edge, and you always have this structure just as you see here in this example, and you'll soon see as we bring up some live charts. Here's how the rules work, and you need to know these in order to understand and appreciate what you're going to see here in just a moment. When the market breaks above the high value area, again, we have it depicted by a red line. It could be a red dotted line or a solid line, depends on your platform of choice. You're in a market that's out of balance and you want to trade in that direction. You want to trade bullish. No longer should you be in short positions. In just the opposite fashion, when the market breaks down below the bottom green line and you break below what we called, again, the low value area, as you see in the key, market is out of balance and we're in favor of the bears. You no longer want to be in long positions. Okay, so you'll see very quickly here, it's three simple lines, but we say it's profound because it helps you to determine what side of the market to eliminate from your thought process. Imagine if as a trader, every time you made a trade, you at least knew you were trading in the direction that had probabilities. Notice I didn't say certainties. There's a lot of folks out there with some pretty interesting marketing that'll tout some pretty impressive win percentages. We shoot straight here at TAS. Okay, we don't tout 90% win rates. You're not going to get that from us. Okay, but we will tell you that the biggest moves in the market you will be a part of, you will be privy to, and your losers, if you follow our rules, will be small and modest in duration and extent. Okay, where those percentages land does not matter. We preach a method that actually ultimately, as you'll soon see, allows you to actually, if you needed to, hit sub 50% and still be making money. That's a forgiving strategy. I have a longtime friend who's in the business of creating algorithms. He's actually a savvy trader, but he's automated most of his strategies, and he sells some products in the public. I won't say his name, but he's a dear friend of mine. And he created a strategy that does, in fact, hit over 90% win rate. And I said, why do you do that? He says, this is what people want. They just want to feel like, they're a good NBA free throw shooter, and this is what sells. He's like, really? I don't think this is the most important thing as a trader. I'm like, I know, this isn't even exactly how you trade. I've known you for 15 years. He goes, yep, but this is what they want, so I'm giving them what they want. Hey, what do you want me to do, Steve? And I said, well, maybe teach the way you trade and say, hey, help educate people that it's not about a high win rate, because you're just a few short trades away from wiping away an impressive 90% win rate. I'd rather trade where if I actually start to hit 60 and 70% win rate, I'm really knocking the cover off the ball. But I don't have the strain that if I dip from 90 down to 70, I'm going to have a tough time because my losers are mounting and they're wiping away these little itty-bitty winners, which is usually how most strategies get to those 90% win rates. I plant that seed of food for thought for you here today. So as you look at this chart here, I'm going to give you, we're going through this static example, but then we're going to make this be very tangible and real for you, especially when we start looking at some of your markets as well. So this market spent a great deal of time down below the low value area. Again, down below that bottom green line. Remember, market's in a bearish tone. Well, guess what? Not anymore. When it starts breaking up above here, our traders are getting out of the trade. It's their job to get out of the trade. The prop traders that use our product, that are getting paid very well to follow our set of rules, it's their job to get out, and then they get long. Okay? Market heads higher. The TAS boxes can be used to also establish risks parameters. So your initial stop, put your stop across all three levels. So if you're long up here, as we're in a bullish breakout mode, put your stop below the bottom green line. If it's too much risk, you can also alternatively put it on the opposite side of the POC. As new levels form, as you see they do, trail the stop up like this, okay? Eventually you will get stopped out. and this is your trade. So 3 simple lines, but you get everything from directional bias, specifically when to enter. You can see when you close above those top or bottom lines. You get some zones by which are prudent places to put stops, and trail the stop until ultimately you find your exit to the trade. We lack the time for me to go through some of the other rules, but there's also strategies by which you can exit as we move back into balance. Right here, I call this C1. Cover 1 unit of your long trade. Right here, we close inside another value area. Cover your second unit. Before I get to that slide, I'm going to bring up some charts here because I want you to see this stuff in a before and after fashion. Okay, this is eSignal for those of you that are wondering. Very nice offer later in the session for NinjaTrader and TradeStation coming your way. I'm showing, this is Apple, and if you can't see the top of my screen up there, this just is a 4-hour chart. Down below, to highlight and show you that what I showed you in the slides is very real, this is your volume, as most of you probably have it on its chart. Now remember, you see these very regular spikes in volume right around the opening, and you know, it's very regular, but there's no edge there. There's no edge in seeing this, because this tells me there's a lot of liquidity there, and a lot of liquidity here, and a lot of liquidity here. But notice, it does not give me a directional bias. It does not give me a specific entry point into the trade and when it's time to go. And it certainly does not give me any ideas on where I should put my stop and when it's time to trail it. So I want you to appreciate that this is, again, this is my challenge and opportunity as president of TAS, to help people realize that just having volume by itself is not the indicator. That does not give you the forward-looking perspective you need as a trader. That does not give you the foreshadowing of where markets are likely to go. It is solely, and I mean solely, an ingredient. So it's important, but it is solely an ingredient that drives market profile and the levels. Right here, okay? So this is the same chart, by the way. So you look at this same chart and you can see, again, look at markets breaking down below low value area, probabilities take it lower. Remember, take the stop, start it up here, and you trail it down. I call it the slinky stop technique for a reason, because it's like a slinky. My young kids, 8, 5, and 3, have no idea what a slinky is, but I'm hoping most of you do. Again, you put the slinky at the top of the stairs. When a new step forms, you let it trail down and trail down. You get stopped out right there. Do you see how that works? You run it the opposite way going this way now. So here, I'll put a big L, long. And stop goes down below all 3 levels. When new levels form, trail the stop up, getting stopped out there. Again, your trade is going this way. Let me show you a loser. I love showing losers. Isn't that crazy? Everyone else wants to talk about profits. I'm going to talk to you about losers. You know why? I've been doing this nearly 2 decades, and customers that have been with us over a decade said, you know why I'm a customer back then and still now? Because you don't give me a line of baloney. You don't overhype it. You make it matter of fact. You say, I am going to have losers, but through your tool, it's going to be short in duration, small in extent, and that's refreshing, because I want to set proper expectations. So here you go. Here's a short position. See it? You're closing down below that bottom green line. And I told you earlier, markets will favor heading lower. Probabilities, not certainties. Stop here. Trail the stop down when new levels form. You're getting stopped out, but look at the size of that. From here to there. There's your loser. Okay? Okay, well, let's take, going back the other way. Again, I'm just showing you this is one example. I'm going to show many to you here today. Long. We close above that red line. Stop down below the bottom green. We say it's a good idea to stay below technical lows as well if you can. And then trail it up. New levels form. You're stopped out up here. Let me bring up another example. Okay, here's crude oil, by the way. Works very well on crude. As you're looking at these different markets, I want you to appreciate something that is uniquely different about TAS than a lot of other providers that are out there. And that is the fact that TAS works on any market, any time frame, any style chart. Most people say, no way, no way. You know, I've got a great tool. It works on the E-mini S&P only on a 5-minute chart, and it's a great tool. And it may very well be. I know there is some great tools that have that very targeted expertise. Some you may have learned about here today. But guess what? You know why I love this product and started using it 16 years ago before I was president? You know why? Because I supported over 2,000 traders as a commodity futures broker at that time, and I had customers trading all sorts of things. I needed a tool that would work on any market, any time frame. Question from Phil, does it work on Renko bars? Yes, you can trade this on stocks, ETFs, futures, forex, no problem. Time-based bars, tick-based bars, range-based bars, Renko in case. If that doesn't cover, the type of charts you're looking at, I'm going to show that to you here live. This is a live chart. Obviously, nothing's moving. It's Saturday. This is a 4-hour time frame of crude. I want to move this out of the way. Look at the levels. And yes, my skeptics, and I hope I always have a few in attendance, yes, these levels are intact on the hard right edge, and yes, they do update in real time. And yes, forex as well, Mitchell. We adapt it to time at price since there's not a centralized volume exchange. So again, bullish, 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 and all you're doing is trailing the stop behind the levels. Little buffer behind the levels. We don't say put it one tick outside. That would be you requiring us to be absolutely to the tick perfect. We say leave a little buffer, but that's your trade on a 4-hour time frame. Let's go to a little shorter term. Okay, let's go down to, I don't know, a 5-minute chart. Here you go, 5-minute chart. I'm just picking any time frame out here. Here's your 5-minute chart with our levels. Okay, again, your naked chart on the left. Here's a 5-minute chart, OM, to answer your question. Yes, it works on shorter term charts, absolutely. Short term, day trading, high velocity, swing trading, long-term trend following. Okay, here it is. This is a 5-minute crude. Again, let's broaden it out to a daily. Here's daily. Again, we looked at every possible time frame on crude here. Same rules of engagement. That's the beauty of this system. That's why this is so popular with hundreds of brokers. Why? Because every broker is a little different in how they trade or teach. Every trader is a little different in their preferred velocity, markets, and time frame. This allows you to take the same set of rules. Again, be long above the top red line, put the stop opposite of the green, trail it up when new levels form. I just taught you in a few short minutes, as promised, how to deploy market profile without reading the 700-page book and taking the 3-week lesson or some overpriced boot camp. And I did it all right here. Let's look at some examples. Feel free, and I have no problem with this. Jeanette always goes crazy when I don't have it on the script, but I say that's the most powerful part of my presentation is the fact that I don't have to cherry pick the charts. I taught you on some PowerPoints here today, but we can bring up anything. It does not matter. Some people were asking about gold. Here's gold. Okay, this is a gold daily chart. Let's look at that daily chart, and you tell me if you'd be interested in using TAS Market Profile after looking at this chart. Again, this is your trade. Here, you're getting stopped out here. There's a small loser right there. Monster winner here. I mean monster. Nearly $100 move. You give me any market and time frame you want, folks. This is the easiest part of my job. This is how I earn your business and your confidence. Because you can't come in here and throw a curveball on me and just kind of hope that I maybe cherry picked your favorite market. It's impossible. Bruce wants to look at NQ 5-minute. All right, let's go look at the NASDAQ. Here's the daily, by the way. You would be well served. Look at that. Again, trail the levels up. It has been alongside of the stock index products all last year for long term. And here's your 5-minute chart, okay? Again, your naked NQ 5-minute chart. Here's your TAS boxes levels on your chart. See how clean we still keep it? Now look, we have other indicators, and Jeanette and Silas know this, but you don't need to make it even that complicated. Here's what some of the other tools look like. This is a Euro currency chart I was looking at earlier this morning. It's a market I trade. These are some other analytics that we have. But you can keep this so simple, and I want you to, especially in the beginning, that you can rely upon these 3 simple lines to make your decisions. Let's go take a look at that Euro currency. Here you go. So again, there's your 5-minute NASDAQ chart. That's your chart, not mine. Swing time frame, here's a 4-hour. Some of you like that swing time, 4-hour and 60-minute. There you go. There's your proof of concept. Again, look what the market does when we're above that top red line and out of balance. Look where the market goes. Look on the few occasions where the market breaks down below the bottom green line, but the market has other ideas, and I'm telling you would get out, going to take itty bitty losers. That's the forgiving strategy that works. Now let me show you something. I'm going to get back to the slides here. We'll come back to this. Don't you worry. I know you're excited. We created a tool for one of our bank customers, and they got many hundreds of traders using our product. This is many years ago, actually, and they loved the product. It really helped. It actually saved one of their trading divisions. They were about ready to close an entire trading division. Pink slips pre-written for this group. We get the emergency 911 call. They actually called John, and they said, we're about ready to shut down an entire trading division. We found you on the Bloomberg terminal, Taz. This looks promising. You know, we know a little bit about market profile. You guys need to get out here and help us fast track our learning and start deploying this stuff. Otherwise, again, we know what our outcome's going to be. We're all losing a job, including the trading desk manager. So we went out there. I think we were out there 3 or 4 days. I was there 3. John was there 4. And we spent a great deal of time on site, fast tracking the knowledge, really kind of going through this process, but in more depth, of course, and helping the traders realize that it's not about making your trading more complicated or speeding up, trading faster. That's what makes you a better trader. It's actually, first, being able to trade on the right side of the market. So our tool instantly, as you see, helps you eliminate the side of the market that doesn't have probability. So at least you know you're starting your road trip in the right direction, north or south. And then from there, it's all about just analyzing whether the risk makes sense for your trading and risk pedigree. So I'm proud to say we have saved entire trading divisions. But it leads into the story here. We went back and we do some follow-up consulting with these groups to see how things are going. And obviously, we get a lot of free steaks out of that deal, by the way. When you save an entire division's jobs, you get a lot of free dinners. But we go back, and this is some years ago, they said, you know what, we love your product. You know what, though? One of our frustrations is that when we're looking at chart A, we're missing a great chart on chart D, E, and F. So they said, let us find an opportunity easier. Can you do something for us? So we went to our trading lab. We created what ultimately is now known as the TAS Profile Scanner. Now, this thing is so cool. And in fact, I'm going to use this as an opportunity to bring up a live representation of it. It's right here. I'm bringing it in my screen. So this is called the TAS Profile Scanner. It's one of my favorite products. It's totally standalone, so if you don't even have one of those 10 platforms I showed you earlier, doesn't matter. This thing rests on your desktop. So this is, I have the S&P 500 and NASDAQ up here. And this allows you to, remember what we said is the most important thing? Knowing whether you're above, below, or in the balance area? Well, guess what? We've incorporated an entire dashboard here that covers weekly, daily, 4-hour, and 60. Those are the time frames in this tool. But you shorter-term traders don't discount the value because, remember, you knowing that longer-term time frame to the left probabilities can also help you on your shorter-term trades. Imagine being a 5-minute chart trader, but also seeing some profound opportunities or synergies on all of these long-term time frames. Wind at your sail. It only is going to help you. Well, you can use, again, you can look at 5-minute charts with your boxes. So let's go, one of my favorite ones was, last year we've been in a relentlessly bullish market, but there's still some folks that like to look for that short side opportunity, that needle in the haystack bear market. So I'm going to go up here and go through our sorting in the top left up here, and I'm just going to hit, show me those that are below profiles on the weekly. And you can see now that first column is all a sea of red. I'm going to say this one, this one, this one. Click, 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 click. Took me 3 seconds there maybe. And you can scan for futures and forex too. You got it. That took me 3 seconds, folks. I don't know if you blinked. It took me 3 seconds, and I narrowed down, and I found the 2 candidates in the S&P 500 and NASDAQ that actually are in a sea of red. Iron Mountain. I just clicked it here, and look what we have here. You would never find Iron Mountain and Kimco Realty Corp in a million years looking at 600 stocks. It's impossible. You just can't do it. You don't have enough time. But look what we have. By using the sort mechanisms which are up here, I found the 2 needle in the haystacks in 3 seconds that are the 2 most bearish candidates, and look what these markets have done. This down in the bottom is called the landscape chart. It's so cool. Again, these look familiar, red and green line. When you're below the bottom green line, you're bearish on weekly, bearish on daily, bearish on 4-hour, bearish on 60. You could use these same levels. You could put your cursor here and use these as to where to put your stops. So you put your cursor here and look, you get the numbers, putting your stop outside those levels. This is essentially saving you from not only having to look at 600 stocks to find these 2 candidates, but then saving you time from having to go look at 4 separate charts of these candidates. You can see exactly where the market is, that's the yellow line, relative to the value areas across those 4 time frames. You can't get that anywhere else. In fact, we actually are the world's only publicly available market profile-based scanner on the market. We are the one, we are the only. Waiting for somebody to come out of the woodwork and tell me otherwise. It hasn't happened. We've had this product out for 3 years. So the answer is yes, you can do futures as well, and I love the futures. This is especially useful for stocks, right? Because there's so many choices. So here's futures. Okay, let's say you want to find the bullish candidates and the usual suspects in futures. So let's go above, 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 above. I clicked it, and I narrowed it down to 4 candidates. So instead of wasting a bunch of time, I narrowed it down to 4 candidates. Look, it's a sea of green. We all feel happy when we see a sea of green. Let's click on lumber. Not the most liquid of, of markets. So we can look at another one. Here's that NASDAQ. Okay, now I click it, and look what it does. This gives me a NASDAQ chart. This has built-in charting. Look, weekly, daily, 4 hour, 60. If I click these, I'm going to get my TAS box levels right within the software. I'm not kidding you, folks. I use this thing relentlessly. Look where we can see we're bullish on all 4 time frames, and most importantly, we can see the areas when we would be back in balance. You would have to look at 4 separate charts on one of our compatible platforms to find the same information. So this is why, as you'll soon see, this is a great trader's companion for somebody who loves TAS Market Profile, is using the charting indicators on TradeStation or NinjaTrader on the free demo platform or what have you, but you still want that time savings. You throw this up on one of your screens, and it operates on its own. This here is awesome. This is your best friend. It's called TAS Says. It's basically like having kind of a virtual assistant employed by us talking to you about what you're seeing there on the long-term, intermediate, and short-term view. Now, I'm not sure if you could see this well on my screen. I'm just going to read you a little snippet. Trend is favorable to longs and has been in force for 7 weeks with primary long-term support at 67.33. Be on the lookout for new weekly profiles attempting to appear, blah, blah, blah. Here's what you need to know about this. I used to write a very prominent market analyst newsletter. Very prominent. It was very lucrative for me in my time as a commodity broker. I'm going to share a story with you. It's more like a Steve confession, okay? So give me some credit, okay? I'm at confessional on Saturday morning. There are plenty of times when I had thousands of people following my every word on an email-based advisory, and guess what? I like golf too. There are plenty of Friday afternoons where I've had a great week already trading that I didn't write an update. And again, that's why I'm confessing this reality to you. I'm sorry. And guess what? Don't feel bad for those that followed me. We did quite well. But the reality is there's plenty of times I didn't write an update because I had a tea time. I had things to do. Life was calling me. I'm only human. And it takes time to write these things. When these market analysts write these research reports for you and send them out to you on email or on a website, it takes time when somebody's doing it manually. That's a problem. So what we did here at TAS, since we're a savvy software company that's known all over the globe, we created an algorithm, you know, that actually can talk to you in English. We got people already asking if we can output this in other languages. We're not there yet. But it's basically our algorithm, our TAS robot, which outputs all this great information to you, and it just verbally is telling you, guess what the refresh rate on this is? 60 seconds. That means the oldest the information you're looking at here is 60 seconds. Sure beats having to wait till Monday because I had a tea time on Friday, right? So the good thing is, an algorithm that powers this product doesn't have tea time and it doesn't play golf. When that starts happening, folks, when artificial intelligence gets on the course, I'm out. It's hard enough as it is. Yes, you could say that's essentially artificial intelligence. It is we've written permutations pulling from our algorithm, which is essentially what artificial intelligence is. We've programmed it to talk to you and give you the right message based upon the criteria. It is. I can't even overstate how powerful this is. Here's forex. Here's the majors in forex. Same thing. Again, here's the Aussie US dollar. Look what you can determine. I clicked it and I can instantly see we're bullish on weekly, daily, 4 hour. If I want to look at the 4 hour chart, click the 4 hour and look at how quickly we load. Guys, no data fee required, no exchange fees required. This is all wrapped up into a nice little tight package with a nice little bow on top. and you get the levels. So you use these levels to know when it's time to enter, but remember those same 3 lines where to put the stop. Powerful stuff. I'm going to show you something even more. I'm showing you a feature called the Matrix Finder utility. If you're like me, sometimes you just want the people you trust information that you're subscribing to just tell you what to do. How many are in that camp? You can type Y in the chat box. Whole lot of Y's coming in. Well, here you go. The Matrix utility is a brand new feature we piled into this. It's included. You don't have to pay extra for this, even though we probably sold ourselves short there. There's a top 5 bull and bear list here. And what this essentially does, this is breaking down tangible opportunity. There's Apple at the top. The pattern is an uptrend reversal, so it's a D short, daily short. It's based on a daily pattern. If I were to click this, you can see it's going to change it to an Apple chart daily pattern so you can see the chart to match the idea. Beta 50. At what pace is this market moving relative to the index? 1.91. TVP, that's the equivalent of entry point. TIP is invalidation point. That's a stop. This is target. We had to do this for compliance reasons. Why didn't we just do entry, stop, target? For compliance reasons, it's validation point, invalidation point, expiration point. Trap, that's risk reward. So let's say you want to find the highest risk reward trades. You could take this trap range thing. Don't worry about memorizing all this. We got manuals, videos, online resources. I'm scrolling this over, and as I scroll this over, it is narrowing to the biggest risk reward trades on the board. And here they are. Over 10 to 1 MDT. Over 10 to 1 risk reward based upon an entry. Again, this is giving you a very specific idea based on the daily chart. Entry 86.57, invalidation point 86.30. You could see a very modest 27-cent risk. But the target 89.47, that gives you better than 10 to 1 risk reward, very specific entry, target, stop. Here's another one, 7 to 1. So talk about getting rid of the excuses on, you know, I didn't know that there was going to be a market moving. There's no excuses when you use the scanner. It is right in front of you. It's just whether you choose to have it and choose to use it and come to John and my recurring trainings that are, again, we're going to talk a little bit about. It's not just great products. We give you great ongoing learning opportunities each and every week, every single week. So that's the scanner, okay? There's some very cool things built in here as well that I'm going to just kind of go over very quickly. And that is up here, it's called Market Breadth. Let's click on like daily chart here. This is the S&P 500. This is all within the scanner. You know, John and I spent a lot of time strategizing on our products in fair market value for our services. And, you know, the reality is that this product here that we call the TAS Profile Scanner probably could be 5 different products in reality. But we made the decision to just bundle it all up into one literally rock solid feature rich tool. So it totally blows you away. So this is called Market Breadth. Now what Market Breadth does, we're on a daily time frame. This gives you essentially, if you view every stock in the S&P 500 as worth kind of like a chip, if you will, right? This gives you a chip count, you know, for those of you that play cards or what have you. And look what you see here. 303 of the S&P 500 stocks are bullish. If you were to look at on a daily time frame of all the stocks in the S&P 500, you would find 303 of them are above those TAS boxes. Remember, that's bullish. That's why that green line is up here. Okay. Now look what the market has done. This is just a simple line chart that we give you for convenience down below. By and large, look at the top chart. It's a whole lot of green up here. And therefore, the market in this time frame continues to rally. This helps you, again, this helps you to trade on the right side of the market. Powerful stuff. Remember, half the battle as a trader, thank you, Arthur, half the battle as a trader is eliminating the side of the market that has all kinds of pitfalls and uncertainties, and trade with probabilities. Trading has always been about probabilities, not about certainties. It's a fact, okay? I'm going to tell you a story in just a second here. So you can break this down into other time frames as well. You can do different index products. And so here's the hourly. And look, the hourly, again, there's your hourly line chart. Look what the market's done. And do you see this green line up here? At some points, it was 62%. most recently here, 64%. Do you want to trade on the short side in an hourly time frame in, let's say, the S&P 500, or even just trying to find a bearish candidate when you have 60% of the stocks in the S&P 500 are bullish? You'd be out of your mind. You are again swimming upstream. As a trader, don't swim upstream. You don't have to when you have transparency tools like this. You could do weekly too. There's some good questions. You could do weekly? Yes, here's the weekly. Again, look, there's no reason to be in the bear camp on the big picture weekly or daily. That has been good. Anybody that's tracked the long term in the stocks. Okay, that's built into the product. Now let me pull this away over here because I've got plenty to share with you. So we talked about this here. This is just a little static screenshot of it, but I wanted to show it to you live. We talked about the matrix feature, which actually helps you find ideas fast. So in combination, you'll see. This is where we bring it together, okay? There's a lot of trade rooms out there. It's kind of the fashionable thing to do. Well, guess what? We have one too, and we're going to give it to you for free. There's some, it's Saturday, but we got hundreds of people in here. Hundreds, enjoying their Saturday, as you can see. But look what we do here. I want to show you the chat room community. This is just to give you some, these are actual long-term customers. I know most of these people personally. This is someone sharing their chart. That's not me. That's a user. Keep scrolling up. People are, I'm in there chatting away, sharing. We do live screen shares in here. There's another customer sharing a chart. I'm just giving you a little sneak and peek in here. And there's all kinds of other neat utilities we have built in here, ways for you to track upcoming reports. You can also track, releases and stuff like that. This is a cool little widget that you get. It helps you track, if certain things happen around report time and give yourself an alert. Very cool. I just want to show you this because it's going to come into play of what I show you here in just a bit. These are real people, real users. You could see the product in the background. I think it makes it tangible because it's one thing to sit and take my word for it that, just because I've used this 16 years and it works great for me and Bloomberg and institutional traders love it. It's another to hear it from regular independent traders. You could be a part of this community starting this week. Very cool. I just wanted to show you that, okay? So that's the chat room. That is Jeanette is, if you haven't figured it out by now, she's an absolute sweetheart, but she's also one of the best negotiators on the planet. I will tell you that. Next time I buy some real estate, I'm going to probably give you a call, Jeanette, if you're listening, okay? Because you're going to get me a heck of a deal, just as you always do for your audience. So I'm going to move into, I guess you're going to call it my kind of summary of our process, because it's really important for you to understand how we do this. Hey, look, you already did step one, so you can check that off the list. You did this webinar. You got your introduction to market profile. And my only goal here today was to maybe let the marble roll around a little bit, spark your interest in, wow, this is amazing how simple trading can be if I embrace the right method and tools. The next step, I'm going to give you some information on this here, is you got to get the structure. I mean, you can learn about this academically all you want, and there's no problem with that. I do webinars regularly. I'm going to be doing many more with TradeThirsty coming up. But again, the rubber meets the road, getting the structure, getting the blueprint that I put before you. Step 3, we're going to give you actually a video course. This is a fantastic course. It's 6 hours in length. It's the same course that we gave to Bloomberg terminal users that pay over $2,000 a month to use our product. Yeah, that's right. The terminal is over $2,000 a month. Most pay about $2,400 per user to get access to our information on the terminal. Step 4 is keep learning. We never stop learning. And I think Rob said it best before me, and I agree 100%. I actually, in recent years, have still learned from traders that have pointed out patterns and unique ways to use our product. And I think that was awesome that Rob had said that. I agree 100%. I benefit from this process as well. I really do. So we do have online learning venues, and then you can see the pure chat room. That thing has some serious value. We do offer a subscription for it, but again, Jeanette, yeah, you have to thank for that. Keep her on your Christmas list, because that's going to be available to you at no cost, literally no cost. It's a very powerful way to learn. So here's the pitch, and then I'm going to do your Q&As, and we can bring up some additional charts for whatever length of time before I get the hook here. We call this the Market Profile Masters Bundle, and we offer it on a quarterly basis, and I'm going to tell you why. It takes a little bit of time to learn our product. It is simple once you distill it down. What takes time, if you watch any of the testimonials on our website, and there's literally dozens and dozens of video testimonials from my international events, real people using the product, saying how this has changed their trading life. What takes time is shedding some of the bad habits and presumptions about the market and kind of just succumbing to the method and following it, okay? Just literally following it. So in this bundle, we're including, on a quarterly basis, this is a 3-month access plan, our TAS boxes indicator. That's those 3 lines. Remember those 3 powerful lines that are going to help you eliminate what side of the market not to trade, so you could trade where you should trade. Place your stops, target zones. Don't worry about saying, I don't understand everything about how to enter and get out. Guess what? That's what the live, and now for you, free screen shares are for. I do them every Tuesday, Wednesday, and Thursday for hours. Okay, you go into the chat room, you'll see a little play button, you'll hear me yapping like this. We're looking at live markets during those scenarios. That's awesome. The TAS profile scanner. If you were to subscribe to that on a quarterly basis, you're going to pay, again, about $300 for that. Okay, you're at $600 already. Our market profile video course, we sell hundreds of those, hundreds of them. I think we've sold 658 since we made it available to the public earlier this year. $500 value, guess what? Free. And then the new interactive chat room, that normally is $150 a month. And thank you, Jeanette, for being the world's greatest and sweetest negotiator. We're putting it in there, but that is very serious value. Add it all up. If you were to subscribe to these things separately for the same 3 months, you would pay us $1,500, and we'd love you for it. But guess what? The deal today, this is the webinar only offer, and we do mean it. $1,000 off the price. That's almost 2/3 off, 67% off for a whopping $497. Do you know what that equals? I mean, if you divide that by 3, and the reason I do this little exercise is I try to draw some perspective to costs and opportunity. That's $165 a month. I'm going to ask a question to the audience. How much do you risk every time you trade? I don't care. How much do you, 200, 400, okay, 1,000, 1%. Okay, I'm seeing a lot of, well, guess what? This always baffles me. You know, there's obviously always a cheaper something out there. There's always something that's free. You won't find it with the street cred and Wall Street credibility that we have here at TAS. It just doesn't exist. You won't find it with so many choices, 10 industry-leading platforms. You won't find it with our own in-house programmers. We've got our own sales team. We've got, again, a full structure. It's not just little old me. I would like to say I'm the pretty face that speaks at the podium, but I'm not even pretty. It is not just me. We have an entire team to support you, okay? We're not a little operation here. The reality is this. It's a small price to pay. Most of you are risking several $100s, it sounds like, per trade. Many of you are doing it, looks like 20, 30 times a month you're typing in. And guess what? You might be risking $25,000 or $50,000, or some of you larger traders, $100,000 a month if you add up the risk on every trade you make and times X amount of times you trade, but yet you can't get over the mental hurdle of spending $500 to maybe start making some better trades, okay? All right. You guys get it. Okay, Q&A. Let's open it up here now. That's all I got for you today.
All right, Steve, I need you to tighten up. I'm going to give you about 3 minutes for Q&A, so zippity zip zip.
We're world's fastest Q&A. Hit me.
And obviously, hit it, pretty boy. Okay, let's see. Do you actually trade real dollars in your room?
We do.
That real cash money, homie?
Yeah, they do. It is real money. It's not a trade room. I want to be clear. I want to distinguish. It sounds like some of the other presenters are doing trade rooms. This is a training room, and there is a distinct difference. I'm a swing time frame trader in commodities, which is not suitable for everybody. Some people are stock traders. So it's really about a training room. The peers, everyone has the ability, unlike most trade rooms, they can post charts. So it's a peer-to-peer group, and there's some fantastic ideas that have been shared, even in the last week alone. Real money trades, real ideas. They're not all just mine. I moderate it and do my live screen share 3 days a week. It's a great way to pick my brain in 16 years of experience, but then you keep the dialogue going with others just like you that are using the product. And you'll find
tell them what platforms.
Okay, platforms, there's a whole bunch of them. In fact, probably the easiest way I can do that, I'm going to just quickly get back to here just so you can see. A picture is worth 1,000 words.
Everybody, we are running a few minutes behind. We had a speaker earlier this morning who had a technical difficulty, and so I'm letting Steve finish his presentation. We'll go about another 3 minutes, and then we'll move on. So everybody just be a little patient here, and go ahead,
yes,
Steve.
There you go. Here's your platforms. Again, a picture worth 1,000 words. You will not find more choices out of anybody on the planet in this space anyway. I'm going to be out in Bloomberg in 3 short weeks. I've got a great relationship with them, and that's not the reason to join, because most of you probably are not on Bloomberg, but you got some other great options up there that are very cost effective, many of which are free. And we look forward to helping many of you kind of take that knowledge to the next level through the free video course and getting live and engaged with me this week. I'm ready.
Okay. Can you change the colors on the scanner? I'm red green colorblind. Can you change colors on the scanner?
That's a great request. At this time, the answer is no. But that is a good one to put in the feedback bucket, and we do take in that feedback, just so you know, folks. We are one of the few companies that actually care what you think about our products. So we've made many changes over the years to make accommodations.
Just on my ideas, like I jumped on one time and I was like, that doesn't make any sense to me. Y'all are geniuses, but I need you to a little crazy. And they did it. They did it really quick. Okay. All right. Yeah. So his link is.
I'll get the link.
Yeah, it's TradeThirsty.com/masters. I'm going to post it up here one more time.
There it is, right on the screen there. TradeThirsty.com/masters. We've had this integrated right with TradeThirsty, so it's nice and easy for you.
And this is a $4.97 quarterly. That's right. So they got, yeah. So they just renew. So if they, okay, got it.
3 full months of access. Again, you can work through the video course at 6 action-packed hours. You can work through that at your own pace. That's a great thing to do, just to kind of get your foundation there, and then you come in and those little questions about, you know, what about this? And hey, Steve, bring up crude oil or bring up Apple. That's the live interaction part that will help, help solidify.
In the boxes, can you split the market profile, add a letter to see the single distributions? That may be too long of an answer. I don't know.
We do not. We're not doing the letter-based method here. Remember, we realized a long time ago that it's not the letters that are important in market profile. It's the aggregation and seeing those explicit levels. So we're
all right. Somebody's saying software updates included, no added fee. Yes, Arthur, I'm going to answer that because I've watched these guys constantly give more value every time. Every time they add something on to a bundle for new buyers, they gift it to people previous, and all the updates come with it. So that's I mean, I would just watch them over deliver, and that's pretty it's pretty awesome for me. All right, Steve, we're gonna wrap it up so I can go ahead and move to Greg, and I'm actually gonna say it one more time: TradeThirsty.com/masters. And Steve, thank you so much for taking time out of your Saturday. I know that it was definitely helped me out today, and I appreciate you guys over there at TAS.
Wonderful, glad to do it. Everyone, enjoy the rest of your day and the presentation from Greg, and hope to meet you at the market soon. Trade well and be well.